All right, so yesterday was one of the more exciting days in this market, certainly in a year. We've had a lot of volatility in price action, but yesterday with the Fed rate cut, Eric, I think it's worth doing a deep dive on some charts and just showing what did the market do? What did our market do? What did other markets do? So
pretty quick reaction right here. This ginormous green candle that went from 25.66 all the way up to what?
right at
2600. This happened right at 12 o'clock Mountain Time, which is 2 p.m. Eastern, right? So this happened exactly when the announcement came that it was 50 basis points, right? So boom, you saw that spike.
Press release, not press conference.
Yes,
Yeah.
yes.
Okay.
So there's important to note on these FOMC days, they release the FOMC statement and the policy choice right at 2 o'clock Eastern. Then there's a 30-minute window before Jerome Powell starts talking. So usually from 2 to 2:30 on Fed days, trading gets really interesting, and yesterday was no exception. So massive spike up in that window. I'll show you silver, same thing, right? Exactly the same thing. Here's where it gets interesting. This is the dollar. So right on that
Mirror
announcement,
image.
you have the dollar dump, right?
So, yep, the inverse relationship here that we see as the dollar declines, gold goes up.
Yep.
As the dollar spikes, gold goes down.
Exactly.
So that was press conference time. So what matters almost as much is what does he say at the microphone versus what the release is, right?
Exactly, because that FOMC statement has already been released. So when Jerome Powell gets up there and starts talking, that is completely scripted. He's not deviating from that. It's the press conference where things usually get interesting because you don't know what question you're going to get asked.
And he was very hawkish in what he said. So
Exactly.
hawkish meaning rates should be coming down. Dovish, rates should be, all right, take that back. Dovish is rates coming down.
Yeah.
Hawkish is rates should stay higher.
And even
right?
another way that you could look at it is hawkish would be more restrictive policy versus dovish would be more accommodating, right? Like trying to stimulate.
Yes.
Exactly.
Okay. And that's what they're trying to do. And now we're seeing all of the inflationary type of commodities react today. So the initial reaction from the release of the news
Was this big jump up,
Yep.
right?
Then we erased it all at the press conference.
Because it was conceived as a little bit more hawkish, right?
That's right. And now the reality setting in that inflation is going to get stronger legs.
Exactly.
Right? And now gold is telling the story.
Yes.
So is silver, right?
Yes.
Showing the same thing today.
Yep.
And likewise, US dollar, you know, it has taken a little bit longer for it to settle, but look at the opposite relationship
Back
with the
down.
dollar.
Yes.
Fun stuff.
This is really what you want to be looking for. The FOMC days themselves, there's too much leverage, too much speculation, so you get these wild moves. But it's the days after and kind of the week after where things tend to play out. And let me just show you, Tori, inflationary assets. So I'm not even going to talk about gold, right? Because gold can do well in times of stagflation or deflation because it's more of a currency.
That's right. Yep.
Silver and commodities cannot perform well in time of deflation. And so we've been teetering this line of like, hey, are we entering this slowdown of growth where we actually get this deflationary period? Or is inflation going to be a little bit more sticky and we hang around this stagflation period? Well, let's just see what's happened today. You've got silver up 3.5%, so up to above 31 again. You've got copper up 1.7%, so it's ripping back up.
Huge move.
Big move. And now look at what oil's done today.
at oil, yep.
Up another 3%. So all of your inflationary assets are heating back up, right? So
There you
they
go.
like the 50 basis points, but what does that do for the future?
Will this be continued?
Right.
We will see. But
Yep.
for the 24 hours, what a fun time.
And just again, the thing to remember is that we weren't necessarily making any moves on this, but what we're focusing on is that ratio, right? Because if we get that deflationary period, that ratio is going to expand as gold continues to outperform silver, and you might get 100 to 1. If we go back to stagflation, you're going to see that compress. So that's the thing for us to watch right now, and it looks as though it's going to be more of a stagflationary period, and I would look for the gold silver ratio to compress.
A video in itself. Hope that helps.